Hey, Carl, I have learned from people familiar with the matter that Blue Owl has decided to call off its private credit funds merger. This is something we've been talking about all week. You all have been talking about all week. This controversial combination of one of its non-traded funds, Blue Owl Capital Corporation 2, with its bigger publicly listed vehicle, Blue Owl Capital Corp. News of the merger, if you recall, restricted investors from redeeming from the semi-liquid non-traded fund, the one being acquired, until the deal was done early next year. Additionally, investors in the non-traded fund would have faced paper losses of about 20% based on the share prices of the larger publicly traded fund. Now, shares of the parent company, Blue Owl, slumping 7% Monday, although it did gain a little bit yesterday. You can see it's currently up about 5.8% right now. In speaking with people familiar with the matter, the boards of directors of the two funds did not see the benefits of the merger outweighing the reputational criticism, as well as the stock price slump from earlier in the week in terms of going through with it. And I'm told that, assuming the board does approve this, that the non-traded OBDC2 fund will allow investors who want to redeem to do so starting in Q1. Liquidity had only been on a quarterly basis before the merger was announced. And shares of alternative managers, particularly those with significant private credit portfolios, have slumped this year, led by Blue Owl's about 40% declines up until today's move, guys.
Yeah, Leslie, any number of concerns involving Blue Owl in terms of underwriting, in terms of how many of their securities include, or their holdings include, pay-in-kind securities as opposed to cash paying. But also, this is an important channel for the company itself, that being the high net worth, this wealth channel, so to speak, yes, selling these BDCs into it. I think this thing has a 12.5% yield, for example. And I guess my question is, what do they go, therefore, do they feel like they've repaired the damage, and or what does it mean for the future of that channel, given how important it is to the overall growth of the company and the hopes that they have of increasing the dividend at Blue Owl itself over time?
Yeah, you hit the key issue square on the head here, David, which is this idea that these semi-liquid products that are sold mostly to retail, of which this was one of the earliest iterations of this, the one that was being merged into the larger publicly traded vehicle, they're semi-liquid for a reason. You only get quarterly redemptions if you choose to do so. So when this merger was announced, it really brought to the forefront this key issue that, hey, you may not like this merger, but since it's being done at a semi-liquid fund, you can't really do much about it, even if you're facing paper losses of 20%. So I think this was a key lesson for retail, for high net worth individuals who have really poured billions of dollars into these types of structures. Now, the question is a good one that you have is, what does this ultimately do for the product, which has been a huge growth area, not just for Blue Owl, but for others across the alternative assets industry? Is this a situation where it causes so much consternation that people start really pulling back and not allocating to this? Or is it something where, okay, they listened to the market, they called off the merger, according to people familiar with the matter, and therefore, you know, it's kind of business as usual? I think it remains to be seen.
You know, Leslie, when there was a problem with Blackstone, Jonathan Gray came on at the invitation of my friend Dave Faber and talked about how there was going to be no problem in BREIT. I listened, and then suddenly he said that there was going to be infusion of capital from the University of California endowment.
That was right. A few weeks
later. And I said, well,
yeah,
their money good. This was unbelievable. Anyone who's in this has got to. Who would ever redeem if the University of California got in? Who is anyone coming in for Blue Owl that's the equivalent of the University of California?
Yeah, we have a bunch of calls out on that. No, it's a great question in terms of just the bigger institutional investors who might be adding to allocations or new ones coming in, and whether that kind of changes the game for them. But interestingly enough, the BDC that is in question here, the publicly traded vehicle, it didn't really slump as much as the parent company on all of this. It was down maybe 2.5–3% as the headlines swirled, as there were questions about, you know, reputational risk and what this means for the state of private credit. So that to me says maybe it's more of a kind of broader industry concern, the fact that it's really the parent company that saw its shares mostly affected by this, as opposed to just the fundamental nature of these two funds and, you know, the merging and kind of what that would ultimately mean.
It's a great point. Talk about the evolution of the overall product in aggregate. Leslie, we'll watch it with your help, of course. Thanks for bringing that to us. Leslie Picker this morning in Las Vegas.